Compound annual growth rate, or CAGR, is a metric used to measure the average annual growth of an investment, business, or value over a specific period, assuming the growth happens at a consistent rate each year. It's a great way to evaluate performance over time because it smooths out any fluctuations and shows the steady growth rate, as if the value grew evenly every year. Let's break it down with a simple example. Imagine you invest $10,000 in a stock, and after 5 years, it grows to $16,105. The CAGR tells you the average annual growth rate over those 5 years, even if the growth wasn't consistent each year. To calculate it, you use the formula CAGR equals ending value divided by starting value, 1 divided by number of years, 1. For this example, CAGR equals 16,105 divided by 10,000, 1 divided by 5. 1. This simplifies to CAGR equals 1.6105, 0.2. 1, which equals 0.10, or 10%. This means that, on average, your investment grew by 10% per year, even though the actual growth rates may have varied from year to year. CAGR is widely used because it accounts for the power of compounding, where each year's growth builds on the previous year's value. It's particularly helpful for comparing different investments or projects over the same time frame. For example, if another investment grew from $10,000 to $14,000 over the same 5 years, its CAGR would be approximately 7%, making it less attractive than the first investment with a 10% CAGR. It's also used in business to measure growth in revenue, customer base, or market size over time. While CAGR is a powerful tool, it has some limitations. It assumes consistent growth, which might not reflect reality. In our example, the investment might have grown by 20% in 1 year, 5% the next, and so on, but CAGR smooths this out to show an average. This makes it great for comparisons, but less useful for understanding volatility or risk. In summary, the compound annual growth rate, CAGR, measures the average annual growth rate of an investment, assuming consistent growth over time. It's calculated using the formula ending value divided by starting value, 1 divided by number of years. 1. CAGR is useful for comparing investments or tracking business growth, but should be used alongside other metrics to account for fluctuations or risk.